what the trends will be in commodity going forward. We've got Peter McGuire, Chief Market Strategist of Fxglobalcapital, joining us from Sydney. Peter, thank you very much for joining me. Let's kick off the discussion with oil. What's happening in this space? We've got President Obama talking about a 10-year strategy. I know it's going to be slow and painful to cut down consumption of oil in the US, but overall, just the concerns in Libya not receding, where is it going to settle?
Well, good afternoon, and thanks for inviting me on the show. Look, I think that the crude price at the moment is certainly going to edge higher from here, and I wouldn't be surprised if WTI takes out the 110 to 115 range in the month of April. And a couple of reasons why. First off, Japan, more consumption there. Secondly, and that's the rebuilding of that because of the power issues, of course, and rolling across to the geopolitical tension in that whole Middle East region. Libya is going to be a very interesting play over the next couple of days, with Gaddafi seem to be gaining strength. It's the momentum on that whole pro-Gaddafi stance versus the rebels.
Is $104 to a barrel just about where it's going to settle and be range bound between 100 to 110? Is that what everybody is mapping out on gold, or pardon me, on oil for, let's say, another month or so, or even higher prices?
Well, I wouldn't be surprised. It's dependent upon the geopolitical concerns, but I wouldn't be surprised to take 115 out in the month of April. Realistically, because of the major issues with, as I mentioned, with Japan and what's going on with the Middle East conflict. So I think that that's going to be, the currencies are another matter, but I really think that you probably could edge a little bit higher from here. I don't necessarily think that all of the problems have gone away in the Middle East yet, and I'm interested to see how Syria plays over the coming weeks.
Let's just focus on gold. We saw a little bit of cooling down with this metal. That seems to be reversing again. Is it just cautious bargain hunting ahead of the US February employment data at the end of the week?
Yeah, I think there was a little bit of profit taking once it snapped that 145 level going back about a week and a half ago, and it was sold off around about $30. And by the way it's looking at the moment, it's going to edge back up to that 1425, 1430 sort of level, and I wouldn't be surprised to take that out by Monday or Tuesday next week.
All right, copper, final one. Let's touch upon that. There's a contrarian view on one side saying demand for metals is going to slow down, but then on the other side, in copper especially, everyone's talking now again about supplies lagging behind the demand. Which one are you picking, and where do you think copper's headed from here?
I think it was very heavily sold off, but rebounded a little bit. I think it'll probably edge higher from here for the short term. Like all of the markets, they've been incredibly volatile over the last month or so, and I think you're going to see more demand for the copper sector with the rebuilding eventually having to start in Japan, and more consumption for Asia. So I think that the supply issues are going to actually be pretty tough, and I think there's more upside.
Peter, thank you very much. Pleasure to have you here with us on the show and understand what you're looking at when it comes to oil, gold and copper.